recipes for technical trading success in Cook's Kitchen.
Hey folks, are you ready for a September swoon? I don't know if I am, but I'm going to buy it if we get one. Looking at a one-year chart here of the S&P 500, remember this mean spike in late September, which took everybody by surprise because September is usually a weaker month. And then we cascade into October, we got the election, and then it's just been a freight train higher. Just, you kiss the 50-day on a pullback and you move higher. If we zoom in a little bit here, notice, look at what the recent pullbacks have been in the S&P. Middle of the month, here's, May 11th, May 12th, check back May 19th, got going here June 16th, got going here July 16th, got going here August 17th, and, they barely get through the 50-day. And this is just eager buyers just waiting on the bid to buy the dips because we've got so many tailwinds: the economy, the Fed, consumer spending, stimulus doesn't hurt. But so let's imagine we get a nice pullback in the middle of September, which takes everybody by surprise. It'll be a catalyst that nobody's thinking about. Here's a piece I did for my subscribers last night. I'm calling for S&P 5,000 before 4,000. So just so you know, my bigger backdrop is bullish, and that we will see S&P 5,000 before 4,000. Here's a chart I showed my folks last night, looking at where a pullback gets going. So down to see these August lows, 3 August lows here. Well, one of them was in July. But this is the 4370 area, and that's only 3.5% down. I mean, we could do that easily. We kiss the 50-day, touch that. There's going to be some eager buyers and big bulls there. If we crack through that, then we're headed to around 4250. Remember the July lows after the Morgan Stanley 15% correction call, we got down just under 4250. And that, you're talking 6%-ish. There from the highs above 45.35. This chart snapshot was taken yesterday, but to me, I'm all about, I don't use trend lines, I use price memory lines, right? Horizontal, where was price, where did it congest, where did it consolidate, where did it take off, where did it break down? So no trend lines, these are all price memory lines. So look at the 4200 level. If we crack 4250, certainly possible. If some catalyst gets the fear going, we've got a nice price memory consolidation from April, and then it became the June lows, 4,200 just below, and that low in June was like 4165 on the S&P. I don't think we get below there. I'm already a buyer, S&P 4300 if we get down here, and then I'm a bigger buyer S&P 4200. And the last green bar down here would be a 10% correction, which also happens to coincide with two other things. One, the 200-day moving average, just above 40.60, and the May double bottom, also 40.60, 65 area. So, that's the worst I see. Okay, so we don't have a catalyst yet, but who's super bullish that, would be a leading indicator of if we were going to be contrarian that needs to get wiped out? Well, it'd be the National Association of Active Investment Managers. These are small fund managers. Average AUM is under 50 million. So these are not the big institutional guys. Similar to the newsletter writer folks like me, and they tend to be contrarian when they get a little bit euphoric, but you can see where they've been hovering. This is net exposure, 100% long, and they've been right on it. But look at the flip-flops here. So when we had the mid-August pullback, they were already trending 2 weeks in a row, 97% bullish, and everybody got quickly cautious, only to have that be a waste of time and money because, even if you can time the pullbacks, if you can't predict their duration and depth, how are you going to take advantage of it? unless you've just got a few things you're going to buy at certain price levels. So they're back to being overly bullish. We should take a look at the VIX real quick. Not that the VIX is, our super indicator of anything, but there is a pattern to notice here. So when you look at the year, it's really condensing and crunching down here. And now remember, 16% on the VIX, that's 16% annualized volatility. That equates to 1% volatility on the day. And we're not having a lot of big 1% moves, but yet the risk is still priced in. And even 20 on the VIX only implies a 1.25% move on the day. So when you're talking about pricing the risk of the market and wanting to buy insurance, this is the way you're pricing it. Think of 16 as 1% moves on the S&P and a VIX of 20 as 1.25% daily moves that somebody might be trying to sidestep. So, it seems like the VIX is ripe for another pop in September into October. Do I know exactly when it's going to happen? No. Again, trying to time this pullback has been a fool's errand. Let me just show you the other strength in the market. I did a presentation for Zacks Ultimate members this week where I just showed, look at the general strength. Here's the S&P equal weight, looking strong. So we're getting rid of the top 10 Fangman stocks and just looking at, and so here's the NASDAQ equal weight, lots of support underneath the top leaders, the top tech leaders. Russell 2000, boy, have you ever seen a shelf, a ledge like this going sideways so tight? Looks bullish to me. And then the other NASDAQ 100, I call it the NASDAQ 200, but it's actually the second 200 stocks, 101 to 200. You got Fortinet, Zscaler, Trade Desk, Datadog, Coupa, Zebra, MongoDB in there, and that's looking tough too. And this is the view through the Invesco Triple QJ, the next generation ETF. These are the stocks that when they grow up, they want to be in the NASDAQ 100, and they're very close. All right, so overall, I'm very bullish into year end, but I think we need to flush out the weak hands and keep everybody honest. Oh, I was going to show you a NASDAQ chart too, just to see. So here's the NASDAQ 100. A 10% correction would get you all the way to back to 14,000. Hey, nice price memory there. Tops in April and May. Nice consolidation in June before it took back off. Huge support there. I don't think we get there though. I don't think we have a 10%er in the NASDAQ unless something happens that I don't see coming. I think 14.5 is probably doable, if you break 14.8, but I'd be a buyer all in here. All right. That's your plan of where to buy any possible September swoon. Thanks for joining me in the kitchen. I'm Cooker.